guys. So if there's any questions, let me know and you'll be able to go back to it and have it as a reference. So right now we're going to be going over the basics of the Discord, how to use it, how to maneuver through, when it's pre-market, during the market, and after market, and as well for the weekends, right? Don't forget repetition. You do something again over and over. It gets to the point where it's like muscle memory. If you go to the gym and work your abs, every single time you go to the gym, you'll see the progression quickly. If you do it once a month, twice a month, it's going to be far more further of a distance of you seeing results compared to that every session or every other day or 3-4 times within a week. So just getting used to the market is very key. Even if you don't trade. Yep. You guys can hear me?
Yeah, we get you, brother.
Okay. Even if you don't trade, I still recommend getting understanding on what's going on in the market. Are we trending up? Are we trending down? Is my favorite stock going up? Is my favorite stock going down? And then go based from there. All right, let me pull up Discord. So of course, go through the terms of service. The group has been around for a while, since about 2020. Actually, a little bit before that. But I didn't have people actually within the Discord till about 2021. I recommend just going through, kind of getting an idea on what's there. There is an education section. So if you're a little confused on certain things, you can go through the education, watch the videos that we recommend, and there's some PDFs. Of course, welcome section, kind of get an understanding on the group. If you have any specific questions and you don't want to ask it in the group, like in the general chat, you can always open a support ticket so that only me and staff will be able to see whatever it is. So if you have a specific question, you don't want to ask it out in the general chat, you can open a support ticket to be able to get assistance. There's a reading and video section so you can understand the basics. The key to options is at least understand the basics before you really start spending even $1. So understand the basics, understand what are options, why stocks go up, why they go down, what do option contracts do, and how does price change. At least understand that before you even spend $1 on an actual trade, right? I do random giveaways. I do recommend setting up your notifications so that you're not getting spam. You can click on the top where it shows the name of the group, top left corner right here, and then you can set up your notifications so that you're not getting all the notifications from the group. Maybe you only want to get specific sections. You can set it up where you get only specific sections in the group also. So if it's staff plays, general chat, Ben 10's plays, Dreadmon's plays, etc. from there, so that you won't have to get the spam of all the messages that occur. Right? Let's see. All right, so the most basic broker when it comes to trading is going to be Robinhood. So there's Robinhood, there's other brokers for you to be able to make trades on, but the most simplest one is Robinhood. Of course, there's others like Webull, Thinkorswim, which is Charles Schwab. There is Moomoo, there's Public, so there's quite a few different brokers that you can use to make trades on. I do recommend this. Have more than one broker so that, let's say, there's an issue on Robinhood, there's an issue on Webull, or you're not able to make a trade, whatever the case is, at least you're able to reference or go on that other platform and quickly go ahead and enter your trade or whatever it is. All right, so having more than one is very good as well, because let's say if you have a margin account. So a margin account allows up to 3-day trades within a 5-day trade period. So if I do a day trade on Monday, it doesn't go away until the next Monday. But let's say if I have 2 different portfolios, I have one portfolio A with Robinhood and portfolio B with Webull. That means now, in a sense, I have 6 day trades that I can use. So I'll be able to build on this portfolio and this one, and I'll have 6 day trades that I can use if I have margin accounts. But with cash accounts, you have unlimited day trades, so you don't gotta worry. Announcements, I haven't used this in a while. I might actually start going back to the announcements so that you know what's going on, what changes that are occurring. Here's, just like I was mentioning, the recommended brokers that you can use. Let's say if you're having issues with Robinhood, it's glitching or you're kind of seeing something kind of a little iffy, you can go to status.robinhood to see if there's any issues, to see if there's any bugs going on or if it's lagging. Get roles. I recommend whenever you get a chance, take a second. This allows you to get the different roles from each section. So student plays, staff plays, news. So whenever I do post news, I'll tag the news thing right here. So now anytime that news gets posted, you'll be able to see exactly what's going on. Giveaways, set up notifications, of course. You can watch this video. It shows kind of the basics on setting up your notifications for Discord, so you don't get spam from every single section. Of course, some of you guys' favorite section, giveaways, right? I'll do random giveaways, just give out free money, of course. When it comes to trading, of course, you want to be able to give back to the people also. So these random giveaways I do as well. This is the new member section, so that whenever someone joins, you'll see them join. I do recommend, just as if you were brand new to the group, I would say kind of welcome whoever does join. It could be the beginning of their journey of trading. They may not be familiar with trading or even Discord. So just saying, kind of giving a warm welcome makes it easier for them to start their journey also. Right now, we got, of course, our 30-day boot camp. We do have the new boot camp starting coming up. Sign-ups right now, as long as you're in the Discord, $200 off. If you're not in the Discord, $100 off. And then after February 25th, I am changing price to the regular, which is $600 and $500. So if you're getting in, I do recommend start early. Daily gems. So I actually got to post our gem for today. This is just for insight, different things that I've learned throughout my trading journey and trading experience, things that others have learned as well. I do recommend taking a second every once in a while to take a look and see what is posted. I want to see you guys succeed. So these gems are really just to kind of give a kickstart on your learning. General chat, everyone knows already. You can talk stocks, whatever it is. If you see something, say something. There's 3,500 plus stocks that we can trade on. So of course, it's going to be hard for you to be able to see each and every one. So if you see, hey, this is starting to move, or hey, I see a big drop on this, you can say in the general chat while market is open. And of course, you guys can talk stocks if you want to give somebody tips on whatever it is. Tech chat, tech talk. This is normally every once in a while, Chris will put his insight on the market and what he does see. Of course, you have the random chat. You can say anything, just like Happy Valentine's, whatever it is. If you see a post, if it's trading related, if it's business related, whatever it is. If you have made money in the group, I do recommend, if you can, take a second, leave a review, just so that we can kind of get a little insight. For me, I take criticism in a good way. I rather make it so that it's easier for your learning, your understanding. For me, I think repetition, right? So if I do something over and over, I get used to it. But I want to still make it as comfortable as possible for everyone in the group. So if you can leave a review so that it can kind of also help others understand what value this group does give them. All right, let's see. You can add a watch list if you guys want as well. And then we got a 30-day boot camp chat where we talk only boot camp. Don't forget, we have a TOA referral program going on. So this is through WAP. So WAP is another, just a payment platform where you can set up your account and you can refer anyone, any referrals that you get. So memberships right now have gone up. For new students, it's $59.99. So if you do end up referring anyone, it'll be 25% monthly that you would get paid on whoever you do have joined. So you can make a little killing on this also. I have a few people that have been doing nicely or at least decently on the referrals. So if you want to take the time, you're literally just posting and I do the heavy lifting. Free market, right? So this is before market opens, certain news that comes out that we kind of post so that you kind of have an idea on what's going on. Before market opens, it's a good idea to see what news is posted. The reason why, there's going to be opportunity. If there's news, that means there's volume. So news equals more people looking at it. So that means we have volume. That means more buyers, more sellers. So more opportunities on the upside or even the downside. So volume is key for you to be able to also take advantage of. Upgrades and downgrades. Every once in a while, I'll post the companies that have upgraded. So let's say if an analyst says, hey, this company has been doing well, and we see that progressively they've been doing well, they'll upgrade the company and post that upgrade. And you'll normally see some upside depending on who is doing the upgrade or downgrade. Upgrade or downgrade, right? General news. So this is used 24/7, 365. So anytime something that can potentially move or affect the stock, we'll post here, right? So TSM, I had mentioned before market closed on Friday. I was actually on the road meeting with someone, and I had seen the news pop up on my phone. I was like, wait, hold on. As you trade more, you're going to start to recognize certain things that can affect the stock, right? If Netflix says they're going to raise their subscription $1, you'll know, hey, the stock is going to move. If a partnership occurs, one company is partnering with this one, you'll know and recognize that something is going to occur. So some movement, it could be up or down, right? But that just means opportunity. So as you see more news, you're going to start to realize quickly if you can take advantage of it, if it's a move up or down. So I saw that TSM had a couple news that came out, and they were almost back to back. I would say about a 5 to 10 minute difference in when it was posted. So what was it? 214. TSM considers operating U.S. Intel factories, and then there was something else. Dell also had something also. So actually 2 minute, about an hour difference. Excuse me. So Dell and TSM. So both stocks ended up running very, very nicely right after this news. So it's important to be able to understand what news can move a stock. That's really the goal, being able to react as quick as possible. But if you don't see the news until an hour later, 10 minutes later, 30 minutes later, you can't take advantage of the reaction that's occurring from that news. So I recommend take a look at the general section, the general news section. Sorry. Have that on an alert so that when something comes up, you'll be able to see and react to it and understand it quickly. Always do your due diligence to see exactly what it means on the news. Here's a trick that I do recommend everyone to start doing. We're in 2025 where AI is everywhere. So now we have ChatGPT. And there's of course other large language models and different chats, right? But you can use ChatGPT to help you understand what that article is or what it can do to the stock. So you can post it right into ChatGPT and say, hey, what can this do to the stock? Can it affect it positively, negatively, etc.? And you'll see that it's pretty good when it comes to finding what the reaction would be. So that's just a little tip pointer that as you trade more, you can use AI to your advantage. That's what it's meant for an assistant, for us to be able to maneuver through life much easier. Not to take over our jobs, but to make it easier for us to be able to maneuver. I recommend starting now with being able to use these AI chats, bots, etc., so that if it gets integrated into your work, your job, whatever it is, you kind of already have an idea and you're a head start on everyone else. Just a little FYI. Earnings calendar. I'm actually going to post the earnings calendar tonight. So this is what the earnings are reported by the many companies during the earnings season. So I believe it is 395 maybe for this week alone of companies that are announcing earnings. So that's a lot of companies announcing how they've been doing. And as you guys have been seeing, it can move up or down. The stock can also report good numbers and still go down. Or the stock can report good numbers, we trade and put in a call or a put, whatever it is, and we still don't make money from that contract. So with earnings, it is risky no matter what. It's like a lotto, scratch off. So I do recommend not using a large portion of your portfolio when it comes to earnings or earnings trades, because it can go to straight to a dollar, even though you see the stock go up. It's called Ivy Crush. So just be careful when you are looking at earnings, trading earnings, contracts, etc. Let's see. Economic calendar. I'm going to post economic calendar today or tomorrow before market opens. So this helps us understand what is being reported, who's speaking, and things that can potentially affect the stock market, right? If we see a report at 8:30, normally we'll see a reaction before market opens, so at 8:30. So let's say if I swung the trade, it will be very vital for me to know, hey, the stocks are going up or it's going down, etc., versus me being in the unknown. So I do recommend taking a look at the economic calendar so that just in case you end up swinging something, right? And then there's an event that gets reported at 8:30 before the market opens. You at least know that, hey, I need to get out of this trade before the market closes so that I'm not stuck. Or if you want to trade on to the report, you know, hey, I need to get into my trade before the market closes because the report is at 8:30 before the market opens. So just know what's going on, and having the economic calendar does help with being able to see the crazy volatility before it starts to occur. So we've seen events at 10 o'clock, right? Or a report at 10 o'clock where the market just reverses. Maybe at 9:30 it was going up, and then all of a sudden 10 o'clock comes around, the news happens, and it plummets. So being able to know, hey, I need to get out before 10 o'clock, before that report comes out, so that you can secure or lock in profits, all right? So economic calendar is key. Over time, it does take some time to understand what does each one mean and know it quickly. Same thing I was saying, you can use ChatGPT. Say, hey, what does GDP mean? Or hey, what is PPI? Or what is CPI, right? What are the Chicago Fed president Goolsby, how does it affect the market? So knowing how each one affects the market is going to be very key. Next up, how to read signals. So this is the signal section. You can look through this. This was made how long ago? From 2020. So it's still the same thing, right? What is your strike price? Understanding your expiration, understanding volume, understanding the premium or how much you're buying your contract for, understanding the bid versus the ask. Here's a tip. Here's a little pointer. Let's say if you're trying to enter into a trade, you're trying to buy into something that you've seen looks good, right? It's going up and it's starting to fly. And you're like, whoa, I want to catch this before it goes too high. When you enter into those contracts, price will be changing very quickly with the bid and the ask. I recommend instead of leaving the bid price, which is automatically there, you can put a little bit above that bid price. So it's kind of like bidding when you're trying to buy your contract. So if you bid a little bit higher than the person that's on the median, the bid price, your contract will get filled right away. So instead of 2 minutes later, your contract, you see it get filled, you can get in right away instead of missing out on any action. At the beginning, when I first was trading, there was a time where I entered into a trade. I put the mid, actually not put the bid in. I put in the bid price, and it never got filled because the price never went to the, and the stock was just going up. You know me, I was trying to buy a car. So the stock just kept going up and up and up. And I'm thinking the whole time, yeah, I'm in. I got to be up. The contract just been is not showing. That's it yet. By market close, I'm gonna see it. Man, oh man, I was sick when after market close it said your order to buy was canceled and it was not filled. So if you want to get into your contract much quicker, you can adjust the price for your premium so that it's a little bit above the median price or mid price, and it gets filled right away. So just a little tip. For staff plays, EC Money, and Sound the Syndicate normally are in this section, right? You'll normally see me, of course. For me, I don't want to overwhelm you on trades, posting 60, 70, 30 trades in a week. I'd rather at least have quality trades over quantity. So I try to shoot for trades that can potentially get to that 100%, get to the 80%. That means if I'm trading and looking for 80, 100%, I'm looking for maybe something that would be affecting the stock like a catalyst, like news. Maybe it's news based, maybe momentum based. So it's moving up crazy, and the buyers are in control. So depending on when I jump in and depending on when you jump in, are going to be two different prices if you wait too long. Sometimes, let's say if I jump into a trade and then the stock goes down a little, you can end up with a better entry. So when you start seeing me say, oh, we're up 100%, meanwhile, you're up 130%, 120%. So sometimes you can wait for the entry, but I would say don't wait too long just in case price does continue with the trend that I was looking for. I'm more of a fundamental trader. I love news. I love knowing what's going on. Love being able to see partnerships, changes in the companies, maybe services, maybe trying something new, whatever it is. But that news lasts for so long. It's not going to be forever. So just like I was saying, if Netflix raises their subscription $1, the stock will probably maybe go up to like 15 minutes. And then whoever was already in and those day traders that jumped in when the news occurred are starting to sell. So the stock starts to go down. So remember, News only lasts for so long. All right. The reason I post the percentages, let's say you're at your day job, 9 to 5, and you can't always watch the charts. You can't always jump on Otis. I post the percentages so that you have an idea. Hey, we're up 30%. Hey, we're up 40%. Hey, we're up 50%. Hey, if I'm up 75% and I'm trying to build my portfolio and I can't look at the screen, whatever the case is, I'm going to take my profits. So this just kind of gives you a little idea on, hey, where are we on the contract? But when you sell, right? Let's say you see we're up 75%, and you sell, and then you see me say, oh, we're up 100%. Oh, we're up 200%. I want you to understand, profit is profit. Because let's say you sold, right? And then all of a sudden the stock plummets and goes down. You made money. Let's say the stock continues to go up. We're making more on the other side, right? We're up 200%. You made money. Understand, you're supposed to build a portfolio and continue to build it. You don't want to risk you already being in the green on a trade to try to make more, because it could have easily turned around. Or with us having Trump, remember, he'll say something or some news comes out and it just plummets or changes direction. It's better to take profits so that you have less risk on the table. Okay. Then we have Ben 10, Tia, Dreadmon, which is the GOAT on there. Chris plays, Perp, Pitbull. He does work, so every once in a while he'll jump on. He did say at least when he's really ready, that's when he'll start posting trades. He doesn't want to half-ass at least trades. So the dedication, when that time comes, will be there. Earn, that man is a shooter. He'll literally be trading early in the morning, 10, 15 minutes, and then be done. So you don't have to trade all day. You don't have to trade every day. So understand, you can see something on the market, understand how it's moving, and that's when you take your trade. Any questions, guys, so far? What up, everyone? What up? What up?
Yep, following you, bro.
Nice, nice. Student plays. Everyone can post their trades in student plays. What I did with the Discord, right? The reason I actually kind of even had the idea to make the Discord, for a good 2 years, Discord was basically free. It was completely free. I use a Discord as my journal when it comes to trading. So some people have an actual journal where they write into it, put their trades, put their reasoning. I use a Discord for my journal. I get an understanding on where I'm doing good and where trades don't work out. Maybe it was based off of news, maybe it was based off of momentum, maybe it was based off of the time that I entered into the trade. So you can post in the student plays and have that as your journal. You can write down why you jumped in, why you got out of the trade. Maybe you're going to work. Maybe you've seen some other news or something came out and you didn't want to stay in the trade. Maybe it started going sideways, you decided to get out of the trade. So you can use the student plays as your journal to understand what's going on in the market and what you're doing well on and what you may not do well on. Okay. Earnings risky, just like it says, risky trades only, right? If I spend $200 on an earnings trade and it reports after the market closes by 9:30 in the morning, I know that this can go any way possible. It can go beautifully if the stock beat and the implied volatility doesn't go bad, or it can go bad where the stock went up and I still didn't make money because of an IV crush. So just be careful when it comes to earnings trades. What you can do is do a trade 2 weeks further out. So instead of doing a weekly trade, you have time. Give it time so that if it doesn't work out the first day, you have a week, 2 weeks for it to get back to at least some value. Tips for success. Over the years, I've posted just tips, different things that I've learned. Others have posted what they've learned and understood in the market. This is a very good section for you to kind of just read through, understand what mistakes others have had, what they've learned, kind of different concepts, terminologies, tips and tricks. So tips for success is kind of just like a tips and tricks section for a little kind of like boost on understanding the market. There's something where it shows at that time, this was the small portfolio, large portfolio, and the medium-sized portfolio, what stocks to trade with. That does change. I want you guys to understand. So if I have a small portfolio in a month, the stocks that I'm trading now could potentially change because of contract value, contract price, and how it does fluctuate. There is a chart on here. Let me go to it really quickly. This right here. So this shows, let's say if you bought at close and sold at open, so you swung a trade. So before 4 o'clock reaches, you bought, let's say a call, put, whatever it is, and then sold the next day at open, how it is more profitable compared to buying at open, sitting through the trade all day, and then selling before the market closes. So you'll normally see, especially with this market, we see change overnight. We see quick changes overnight, right? So you can take advantage of being able to see those quick changes that we do get overnight for trades, even over weekends. Options terminology, what are calls, what are puts, the Greeks, put options, in the money, out the money, that's the moneyness. A short reference on the Greeks, what they mean, theta, right, time decay. One of the most known that we hear all the time, what is time decay, what is theta? Right, that's the thing that affects our contracts a lot, a big factor. As it gets closer to the expiration, time is against us. If we buy contracts that are far out, we're buying time. So that's why they're more expensive. So just getting an understanding of the Greeks and the basics of the Greeks. Videos, this section I have posted. I'm going to post this recording also in here. I'll post it on YouTube so you guys can see it. And then we've posted also videos that have helped us. This one is very good. I think the videos, he is in the money, the name of his YouTube channel. He's very good with explaining the basics. Even if you're experienced, even for me, other traders, I recommend going back, understanding the basics, watch it over and over. It has to be a norm so that when you're sitting in the market and you're trading, you don't even have to second guess yourself on what this means or this. It's a norm. It becomes natural. It's just like a muscle. When you go to the gym over and over and over, it becomes simple, simplicity. So just still watch the basics and then start also watching strategy. The 5-minute video is just as valuable as the 1 hour, 2 hour video, because maybe someone talks for 3 hours, 4 hours, 8 hours, but you watch that short video and it's a quick understanding of what it is. So repetition, same concept. Reading, we posted some PDFs for you to be able to go through. Some on Candlestick. Some of them are still valid for you to be able to use. Some of them I got to repost. There's swing trading for dummies, day trading for dummies, so different PDFs to be able to reference from. All right. Tools. One thing that I used to use at the very beginning when I first started trading is the options profit calculator. This helps you understand how the value of contracts move. So what I mean is how price, if it doesn't go up too much or doesn't go down too much, how you're still losing money. It shows how time decay affects the contracts. It shows how potentially if the stock goes up to this price, you can be making this amount. It's not going to be fully accurate. Remember that, because IV, implied volatility changes. The Greeks, they change over time. So it does change, but this is just an estimate, okay? FinViz Maps is something I definitely recommend everyone be able to understand how to use. It's simple when it comes to looking at it, right? But to use it to your advantage, it shows sections and what each one is in. The semiconductors, it shows the utilities, it shows real estate, etc. Right? There's a lot of pop-ups that'll come out, just close them out. But with this, you can see, hey, this sector is doing well, or hey, this sector is doing bad. It is about a 15-minute delay. So let's say market opens, wait about 15 minutes, and you can see what sectors are doing well and what sectors are doing bad for the day. So just a little tip. You can use stock screeners or scanners. I think on like Robinhood it says scanners, screeners. They allow you to be able to filter through the many stocks that we can trade options on. There's 3,500 plus stocks we can trade options on. So being able to filter through and narrow down the list to maybe 10, 15, 20, so that you know, hey, I'm looking at these, and you can look at each chart to see if you like the setups. Research links, economic calendar. For me, I still recommend when it comes to research. And news is Twitter. Twitter is the best, or now known as X, the fastest way for you to be able to find news. You can search the ticker. So put the $ and then search that abbreviation you see for the stock, and you'll find news. Go ahead and filter and click on recent news, the most recent. So now you can see, hey, what is happening and why did the stock go up? So instead of having to search, hey, what just happened to this stock? You can literally search the ticker and search recent news to find out what just occurred. Of course, there's going to be a lot of like spam, but you can filter through the spam, look through that, and see what is relevant. Technical analysis. It shows on here just some technical analysis steps, tricks, moving averages, how to read a candlestick. It's important to understand how to read a candlestick because movement, right? Understanding price action, what's going on in the market, what's moving up, what's going down, right? Understanding who's in control in the market. What is a wick? Where did the price go to on that candle? Okay. So just going through the technicals, there are two different styles of trading. There's technicals and then there's fundamentals. The fundamentals is using news, using reports, using what the actual reports present to be able to make trades. Technicals is using charts, using previous action that has occurred to make your move on the trade, right? The technicals is using candlesticks, watching to see what's actually occurring and using chart patterns, using indicators. That's all technicals. So I recommend understanding both. How does news affect the stock and what has occurred on the candle in charts as well. Okay. So you can go through this. This also goes over moving averages, the basics of moving averages. The 20 is considered to determine the short-term trend. The 50 is more intermediate, and then long-term is the 200 SMA. All right. Credit spreads, I don't do them, but there's just a quick guide if you do want to be able to take advantage of credit spreads. Web links, those are just a couple few. Pictures that have information. What I recommend, let's say if you're more of a technical trader, you can go on Google, you can go through these charts and use these as a reference. So if you see it on the charts, it can help you determine, hey, what can potentially occur next. Now remember, no matter what we use, it will never be perfect. So this is just kind of a guide to be able to reference, but it will never be perfect. Don't forget, it will never be perfect. For my trading strategy or any trading strategy, the most you'll get is about 70 to 80%. So if you can get 70, 80% on a trade, over and over. So 10 trades, you hit nicely on 7 or 8 of them, you're good. Or at least see green on 7 or 8, you're good. But the moment that you change your strategy or change what you're looking at, then you miss those ones that could have been the 7 that could have been green, or the 8 that could have been green. Right? Start video research. So this one we haven't used in a while. Just some insight from other traders and what they've seen. Tyler, I think actually had requested that one. There's a basic options course, literally a basic options course that you can use as reference, just going over types of stock options, terminologies, really just the basics, calls, but dividends. Here's a dividends course. The goal or the end goal for everyone, of course, financial freedom, be able to relax, go to the beach, chill, not have to hear from a boss or someone yelling at you, whatever it is, demanding something, being on someone else's time, right? The goal for trading would be not having to do too much in the market, right? You can kind of sit back, relax, and watch your money still work. I'm not saying it'd be like a savings, make only 2%, 1%, 3%, whatever it is, but your money really working for you. Dividends is how you can really make a living. There's a few people, quite a few people, excuse me, that grow their dividend portfolios to a size where they don't got to work. They get paid monthly, quarterly, every 3 months, semi-annually, every 6 months, every year, from different stocks that if you do it right, you won't have to do anything. You're making money from the stock itself growing, and then you're getting paid for holding on to that investment, holding on to that stock. It's recommended to diversify a portfolio. So you don't want to all have it in tech sector, the healthcare sector, right? You want to have it diversified just in case this sector isn't doing well for 3 months. This other sector is doing well. You're still getting paid dividends, but you still want to benefit from the stock growing and the dividends also. So diversifying is going to be key to be able to survive with a dividend portfolio. We just actually had some releases of quite a few reports. Some investors like Warren Buffett and a few others, they release what they've sold and what they've bought. Quite a few of these companies or a few of these hedge funds, they have shares in these companies, so they get paid dividends. So being able to see what they're rotating into can also kind of get you an idea that they do sell and buy, even if it is dividend based, so that they can kind of pull back on if there's going to be a crazy drop or crazy change in the stock. All right. Frequently asked questions, just basic questions that have been answered. Support ticket. Don't forget, you can open a support ticket and you'll be able to have me and staff specifically on whatever it is that you need help with. So instead of it being in general chat, if it's something personal, whatever it is, you can put in support. I've been trading since 2014 and running a group or teaching for about, at this point now, just about 4 or 5 years, right? With teaching, I understood that I'm a therapist also. So just understanding that the market, it does change. Situations do change, life comes at us fast. The market is still going to do what it's going to do, no matter what. But if you need anything, just let us know. Literally, we're here. This is, I would consider more of a family versus just a community. So if you need anything, speak up. Of course, stock success section is my favorite section. Seeing you guys make profits, being able to take your profits, being able to see gains. I've seen some crazy things in here. progression, right? Repetition, same thing. When it gets to the point where you can be in the chat over and over, right? Over and over in the success section, over and over, right? It's more of you being able to show your trophy on what you got out of the market. This isn't something we learn in school. This isn't something we learn as we grow up. This could be something that you're doing on the side as you work your day job, right? But just kind of still celebrating those wins. And of course, there's the loss section, right? Understanding what mistake you did or what occurred, understanding why it occurred, or at least preventing a big bad trade from being as bad as it could be the next time. So maybe you sat there and just let the trade just keep bleeding out, whatever it is, right? Understanding, hey, I need to cut my loss, whatever it is. So use it as a lesson when it comes to losses and a lesson when it comes to gains as well. Of course, we know the crypto section. This is like the sports betting section. It is risky no matter what, right? You can get rug pulled, you put in $100, your $100 turns into 200, and then 2 seconds later, someone sells all the liquidity in the coin, and now your 200 becomes 2 cents in seconds. You didn't even blink. So just understand that this is still going to be risky when it comes to the crypto. A lot of people, they jump in, they're like, ooh, I want to be a millionaire off the crypto. You can, but I would say that it does take time and understanding that crypto market. Sometimes it's also luck. Someone's in a coin, they got lucky and they turn $76 into $2 million, which I've seen before. But don't think every coin is going to go 76 to 2 million. Because that, it gets crazy. Definitely gets crazy. Remember in the play sections, I did make at least general chat or staff plays, excuse me, where no one can talk, but at least respect everyone in their sections. Just talk in the general chat sections instead of the staff plays or the crypto plays, whatever it is. I know we do forget sometimes. You see us mentioning the trade, and then you're like, oh, there's a section to talk. But try not to have a whole combo in there. Let's see. So crypto chat, just talking crypto chat. Sports betting, this is gambling. True definition of gambling, right? So understand sports betting will always be just like it is gambling, right? It can hit, it can miss. Of course, there's times where you can get better odds on the sports, but of course, the player done he turned up the night before and he don't perform like he should. Same thing, right? Let's see. That is it. Any questions, guys?
No, I did.
Everyone else? Everyone else? So you can use ChatGPT to help, but we're not going to use it to necessarily tell us, hey, the stock is going to go up or down. It's still going to be what happens in the market, right? I've seen good news come out and the stock goes down. I've seen bad news and the stock goes up. So it's depending on what occurs in the market versus what you see ChatGPT tell you. So just be careful with just anything that you get when it comes to your trades. You still got to do your own due diligence. You still want to be able to understand the market. If all your resources aren't available, you want to be able to understand and make those trades based off of what you see. Staff plays, of course, and all this section right here, used during market, general news, used during the market, so that you can get that information quickly and be able to react to it. What I do try is for the news section on my Twitter, I'll pull it up real quick. On my X, excuse me. I recommend following it. Reason why? Before I post it in the group, I like and retweet it, and then I post it. So you'll be able to see it before I do send it into chat, like a minute before. But anytime that I do see something, I like and retweet it beforehand, just so that if anyone's following, they literally use it based off of that news, and you'll be able to see it. Or if I ever forget to post it, then you'll be able to see it as well. Twitter is Nico the Chef. And I literally follow the accounts that we post in general so that it's as quick as possible. Sometimes I post accounts where they'll post the same news 3 times. That means I know that there's more confidence in it being occurring right then and there versus being an hour late or whatever it is. Any questions, guys? Any questions? Y'all with me?
Yes, sir.
Yeah, dog.
All right, cool, good. Anyone have any struggles this week?
Fuck Lily.
Eli Lilly. I got sick. If you're new when it comes to your trading, let's say if you're going to follow someone, right? What I do recommend early, have expirations that are further out. Have expirations that are further out. The more experienced traders are trading contracts that expire in 4 days, 5 days, 3 days, 2 days, the same day. If you're more new, have something that is at the following week. So that let's say if that day it doesn't work out, let's say the next day it doesn't work out, you still have time for that reversal, for example, or maybe we just got in early. I've got into trades where I was a day early. I was like, damn, I'm a whole day early. And then the stock flies off the roof, right? So at least giving you time will help you with those contracts that expire the next day. So you're not going to lose $100 in overnight. So now if you trade it and put in a contract the following week, that $200, for example, can still play out. Maybe you lose $40 that day that it would have been $100, your whole amount. Now the next week, let's say if it goes up, now you're up 100%, 50%, 60%, versus you only had a day and you could only react within that time. The more that you see the market and how the contracts move, the more you understand that if you buy a contract on Friday and it expires on Friday, the closer it gets to 3 o'clock, 1 o'clock, 2 o'clock, the value of that contract is starting to go down quickly, rapidly. Even if the stock is going up, the value of the contract can still be losing money if it doesn't go up enough. So as you see more of the market and understand and get that experience, you'll start to see and recognize, hey, if I'm trading on a Friday and it's getting close to expiration, I need to get out. Or especially if I see profit, let me take my money and go. All right. The market doesn't care what we're doing. The market's going to do what it do. So you see profit, take it. Don't be a screenshot fanatic. Don't be just a photographer in the market. Take your profit, go about the next thing. Now you have money to play with on the next day for the trades, right? Now you can compound. Now you can turn 200 into 220, 220 into 240, 240 into, and so on and so forth. As it grows, it's compounding. I know we all want to make 200 into a million overnight, but it's better to take time of it with it. The reason why, for most people, I would say probably like 90% of people, let's say as quickly as you get money. So let's say you get money overnight, you'll spend it just as quickly because you'll see the thrill of making it so quickly. So, or think, hey, since I made it in one day, I can do the same thing over again. So just as quickly as you can make something, you can lose it as well, just as quick. So understanding compounding will be able to gradually help you get into a momentum, you into a groove. You do something, I believe it was 21 days over and over, right? It becomes a norm, a natural habit. So let's say if you're putting in $200 trades, you're consistent with that. But let's say if your portfolio's at now 10,000 from 1,000, whatever it is, now you're like, oh, I got 10,000 to play with. Now I can spend 3,000 on my trades, whatever it is. No, if 200 works on the trades, continue to do what works. Because the moment you start to increase how much you're trading with, that's when emotions start coming into play. That's when you're not trading like you were before, because that emotion starts to come into play. So understand, if it's working, don't change it. You don't got to add more onto your trades. You can continue doing the same thing over and over. $100, $50, $200, trading the same stock over and over. Apple, Google, Microsoft, whatever that stock is, right? Choose that stock that you understand the personality of that stock. When it's going up, when it's on an uptrend, when it's on a downtrend. If some news comes out, you know and understand how to digest it quickly so that you can react to it, right? But the moment you start flipping from one stock to the next one to the next one, you never truly understand how the stock moves, how the market moves on that stock. Is it on an uptrend? Is it on a downtrend? Right? So choose 1, 2 stocks, maybe 3, that you know how they move. And then you can start adding more as you start to understand those stocks. All of them have a different personality. Yes, there's sectors. There's different sectors, the tech sector, the health sector, bank sector, but they all still move different. There's times where maybe the banks are doing well, so you'll see JP Morgan, you'll see Wells Fargo all going up, but maybe Wells Fargo is getting more action compared to JP Morgan. Or maybe the semiconductors. We all know the most well-known, NVIDIA, right? NVDA. That gets normally the most action. But there's still AMD, there's still ARM, there's still the other chips that are part of the semiconductors that when the semiconductors are moving, those are moving also. So just knowing where opportunities are in these different sectors is key. Very good key. Any questions, guys? Any questions?
Not at the moment, bro.
No, sir.
Anything specific you guys want me to go over?
Hey, Nico and Steve. Hey, man. No,
What's going on?
hey, I got a lot. Hey, what's up? What's going on, brother? Hey, I would pick your brain right now at the moment, but I just got called out, man. I mean, I see there's a bunch of different categories that are in Discord. I'm just gonna have to skim through them and just kind of, like you said, repetition, just kind of go over it. Just the general stuff, the putts, how to read the candlesticks, I know a lot of this stuff you're explaining that some of it is based off hype or momentum, and you got technical analysis, so there's several ways you can get in. It's just a matter of understanding the comprehension behind it, I guess.
Find what works for you, right? There's 7 staff in there that have different styles. Sometimes their styles match up to the same stock. They're looking at Netflix at the same time, or maybe they're looking at Palantir, maybe they're looking at Google, right? So everyone's style is going to be different. Something works for certain people. Maybe you're a very patient person, so you can trade leaps, so you can trade stocks, contracts that expire in a month, 2 months, a year. You can watch the gains gradually go up versus trading contracts that expire in a week. If you're busy, trade those ones that expire in 6 months, 8 months, so that when that time when it's on a nice bull run and it's just on a nice uptrend, you see those gains gradually go up. When you start to see the trend change, take your profits, reposition. Right?
And this is your contract with the higher expiration. This is the contract, right? You're referring to
the contracts would be a further expiration. So
now, okay, go ahead.
So it could be 2026. There's contracts that expire the end of 2025. I think I want to say I seen 2027. It's normally about 2 years that they have the expiration time frame. But those ones are going to cost more, but it gives your stock enough time to go up. Or let's say if you want it to go down and you believe it's doing bad, for it to go down. So it gives you that time in the market. But it does cost for time.
Yeah, it's more costly, like to have it pushed back, to have expiration pushed back, right?
Yes, sir. So let's say if I
Yeah.
trade a contract that expires, let's say if it's a Friday, the same day and
Mhm.
expires that Friday. If I buy it, depending on the stock, it could be $14, it could be $20, $40 for me to jump into it. That stock, depending on what it does, because it expires that day, it can go up to from 14 to 200. I seen one, it was, what was it, $6 to $400 on Friday, right? So it's because it expires that day, because the risk is so there's so much risk. But let's say if I buy a contract that expires a month from now, that same stock, that $6 contract could be 1,000, could be 800, 400, 300, depending
The
on
volatility.
depending on my strike price and the distance on the expiration. But volatility does come in play also. So the implied volatility, depending on if that stock can go up $20 in a day, $100 in a day, is going to be more expensive compared to a stock that goes up $2, $3 in a day, because it can go to your price that you want it to, your strike price, in such a short period of time or a long period of time, depending on how quickly it moves. So the more expensive contracts are the ones where the stock can move up $180 in a day. So you'll look at stocks. Let's see, what stock is expensive now? Netflix is kind of. It's just stocks that can move up 30, 40, 50, $60 in one day. We normally trade stocks that can move up probably about $5 to $20 in a day. Tesla, MSTR, Coinbase. And then there's the smaller portfolio sizes. You can trade stocks like Alibaba that can go up $2, $3 in a day, $4 in a day. So it's just depending on when you jump in and what movement that you catch. And remember, you don't got to jump in at 9:30 exactly on the dot. You can wait for your opportunity, wait for the trend to start forming, wait to see a trend, or wait for some news to come out. Any other questions? Any other questions?
No, that's it, man. It's just gonna be repetition, and then I gotta form some type of compounding plan because I don't plan to make a fortune overnight. It's just a matter of getting a good grasp on this and lock in.
So just like, let's say if you jump into a trade, have a number that you have set in your mind. Hey, 20%, I'm gonna take profits. 30%, I'm gonna take profits. 40%. Now, mind you, not every trade is gonna go 20%, 30%, 40%. Some of them may go 10%, 20%, 500%. We've had trades that go 4,000, 3,000, 2,000%, right? So it's still depending on how many contracts you have, how much risk you have on the table for that contract. If you see it's on an uptrend and it's continuously just going up, you see it dip a little, continue to go up, dip, go up, right? You see that nice trend, you hold on, you continue to wait for that trend to continue. And then once trend changes, you get out. Okay, so Drew asks, how and when does volume play a part into when we enter and exit a trade? I'll say an example, right? So let's say some news occurs. News means attention, right? So that's volume. So let's say the news comes out. Sooner or later, that attention is going to go somewhere else. So what happens when that attention goes somewhere else? Stock starts to dump, starts to go down. People start to sell. People start to take profits. So before the rest of the sheep start to sell, You, the wolf, take your money before they start to sell. So while a stock is going up, let's say you jump into a call, right? Let's say you go into a call and the stock is going up, going up. Take your money while as it's going up versus waiting until it to start going down. Because you'll see a trade, you're up 100%, and then all of a sudden you're now up only 40%. You're like, all right, I'll take my money now. You was just up 100%. You just doubled your money. I know you want the 1,000%. That's why you kept holding, but you were up 100%. That's that discipline. That's that, hey, let me just take my money on to the next. So volume also, let's say you see volume start to decrease. The attention's not on that anymore. You should be getting out. Take it somewhere else, right? Look for something that has a better opportunity. You don't necessarily have to actually watch the volume itself. So watch how the stock is moving, price action. Are the candles, do we still got big body candles working in our favor? Or are we starting to see smaller candles start to come into play? That's also volume. How many buyers are in control? When you see a big green candle or a big red candle, that's who's in control. That's a lot of volume. When you see that small candle, not a doji, it's a small candle. It's like small. No, let me find one. Hold on. Let's see. Something like this, right? See a small candle? What's happening, right? We see this red candle, big red, and then a small candle. At this point, we got an inside bar also. This candle is getting engulfed by this one, right? Now we see the trend up. We see it finally break through above this one. So understanding the candles and what's going on, and we see a nice trend from there, up, 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 right? No wicks at the bottom, no wicks at the bottom. Buyers are in full control. No wicks at the bottom. Here's a doji, possible reversal. Nope, buyers are still in control. No wicks at the bottom. There's no confusion on where direction is going on this. So just getting used to seeing that as market is going, right? On the 1 minute, on the 5 minute, whatever is easier for you to be able to understand price. Any questions, y'all?
Nope.
Any specific topics you guys want me to go over? Don't mind going over any specific topics, guys. Choosing your strike price, choosing the right expiration, depending on what you do, let's say daily. Is everyone good with their strike prices? Being able to choose the right strike price?
Yeah, I be choosing them like right out of the money.
Yes. So understanding which one exactly, right? Understanding where to go with your trades, etc.
Yeah, those EMA indicators really helped a lot. And going over what the RSI is reading helped a lot too. So using those two indicators definitely helped me read the charts better.
So with all the indicators, right? The goal is to identify what helps you identify where price is going. Is it going up? Is it going down? Is it trading sideways? Can I take advantage of this move that's occurring?
Yep.
Whatever it is. Right? So just being able to find what works for you. It'll be different for everyone. If I show 1,000 people the same setup, indicators, technicals, fundamentals, there'll be 1,000 different entries and exits. So just understanding what works for you and having that discipline when it comes to actually taking profits also. You can't lose if you take profits over and over. You cannot lose if you take profits over and over. Now,
Right.
when it comes to managing your risks will be key. Being able to cut your risks. So let's say if you always take your profits at 40, 50% when those trades come, right? Let's say the losses, you have it at 20%, 15%, 10%, tight stop loss. So now the most you lose if you spend $100 every single time you trade is $10, $15, $20. But
Yeah.
let's say if you're making $40, $50 on the trades that are green, as long as you can outweigh the wins versus your $15, $20 loss, it over time it makes up. Right?
Yeah.
So being able to compound and have that risk management. You want to really treat it like a business. Really treat it like, if I jump into this trade, do I see profit? If I see profit, am I going to leave with profit? Versus, hey, let me sit into this a little longer to see if my 100% trade goes to 5,000%. And then it goes to 80%. You're like, damn, let me just see if it goes a little bit more. As long as you're up, take your money and run. You're
Yes,
up.
sir.
You're good. That
Oh,
was
yeah.
80% that you didn't have 10 minutes ago, 20 minutes ago, an hour
Yeah.
ago, before you woke up.
Yeah.
And then
Yeah.
go back
Yeah.
and do it again the next day. Find a new opportunity. Or even if it's a week later, whatever it is, right? You wait to see that opportunity where it actually you can recognize it, where you see it come out. Like, okay, I see this trend is occurring. Okay, I see my RSI lined up. All right, the volume's there on the contracts. Okay, the candles, nice big green candles, nice big red candles, whatever it is you're looking for direction. Any other questions, guys?
Mm-mm. Nope.
Boosted pick, Cindy, Drew, iPhone. Don't be afraid to ask questions. There's no dumb questions, especially when we all started at the same point. We all started where we had to understand the basics. We all had to understand strategy. There's not going to be a perfect formula for trading options, right? There's never going to be a perfect formula. There's going to be close to, right? Maybe 70, 80%, boom, hitting 70, 80% over and over, right? But the moment that you change your style that works, or your strategy that works, that can affect those gains that you were getting on your 70, 80% style or strategy. So you want to see, of course, you want to see and venture through and see what works for you. But once you see something is working, continuously go to it right over and over and over to the point where it becomes natural. It becomes to the point where you don't even got to think about the trade itself. You see it occurring, you see it lining up, you see the flow as it occurs, right? For the RSI, there'll be times where I jump in before cross. So before that golden cross signals, I'm jumping in, right?
Mm.
Of course, I can see fake outs where it looks like it's going to cross and then boom, it goes opposite way. But just getting used to be able to see, hey, I see the move occurring and I can catch it before at the beginning, right? But that takes time, repetition. Being able to recognize something, patterns, repetition. How do you know where price action will go? So here, for example, right? We're kind of a little bit going over the candles. Hold on. Take it back to it. This is 2:20 p.m. Yes, this is TSM. This is when that news came out on TSM and the stock flew up. This was Friday. Right now we're on the 1 minute. You see these candles, smaller candles right here, right? Price is starting to gradually go up, right? Price is gradually going up. You guys still with me?
Yep.
Perfect. So the candles, we see they're starting to get bigger. The buyers are definitely stepping in, right? So we know as price is increasing, the buyers are winning. Price went from 198 to 202. Now these, mind you, are 1 minute candles. And what? 3, 6, and 9 minutes. It went from 198 to 201, right? So just being able to see and understand what's going on with price. Who's in control right here? The buyers. Buyers are in control right here as well. The buyers are still in control. Now the candle got smaller right here. Compared to these three, candle got smaller. But the following candle, we got a nice big green candle still. So the buyers were still in control as price still increased. They may not have been as big as these two, or these four, excuse me, but it's still the buyers in control. It's a pretty big size candle for the buyers. Now, let's say we get to this big, nice green candle, right? Once we got to this was the height or the highest point at the moment. The next candle is a doji. So that is a possible change in direction. So when we get this doji candle, we got to be concerned. Is price going to dip and go lower from here? So my doji candle signifies a change in direction. We did get some red, right? So a possible change in direction, we got our red, but we got our continuation. Now, remember when I said indicators are meant for us to kind of have like a handicap, kind of get a little assistance? This cloud right here is Ripster's EMA cloud. This cloud right here. Price bounced off of the cloud once and then continued to ride along the cloud. Let me show you from the beginning. Price, ride along, bouncing still off the cloud. We see that change in price, change in direction, and then we went under the cloud, or within the cloud, and then price continued back up higher. Does that make sense, guys?
Yes, sir.
Perfect. Cindy? Cindy, did I answer your question, Queen? Okay, good. It's important to understand what the candles are doing. That does take repetition, right? But what can you do to practice? The crypto market's open 24/7. Bitcoin, Ethereum, Litecoin, watching the actual candles and the action of what's going on. Understand who's in control. Buyers, sellers. Is it trading sideways or is it choppy? Is it consolidating? So is the next move starting to occur next? The longer the consolidation, the bigger the move. The longer the consolidation, so the longer a stock consolidates, the bigger the expected move. Does that make sense, guys? The longer the consolidation, the bigger the move that can occur.
Heard you.
Perfect. Understanding the chart, of course, is going to be key to your success. When I first started, I thought I only needed to know news, and that's it. But the technicals help with another confirmation. We already got a catalyst, which is news, a reason for it to go up. Now we want to actually watch price change. How does it react to it? How can we determine where is price going next based off of previous action, previous moves? It is 5 minutes before 8 p.m. In about 5 minutes, we are going to wrap things up. So if you have any questions, please let me know, and I can go over it really quickly for you. Anything you're confused on?
Nah, dude.
Perfect. I hope everything I'm going over, I make it as seamless as possible. Hope I don't complicate any things. Don't assume in this market. Do not assume, because if you don't understand it, it'll be difficult when that moment when markets open and you got to react. The market's still going to do what it does. If there's no questions, then I'm going to wrap it up here. Y'all have a wonderful and safe night. We'll be back at it, of course, on Monday, so be prepared.
Tuesday.
Tuesday, excuse me. Thank you. Market close on Monday for President's Day.
Yes, sir.
Thank you. Good pointer. Y'all
Have a great night, man.
blessings.